they are there nevertheless. Other items of concern. Recognize that zero coupon bonds are prohibited. We've seen some insurance companies that have had these investments, and they are simply not qualified investments. An interesting question has been some U.S. government savings bonds. We've got some companies that have these U.S. government bonds where you pay an amount, you don't get an interest payment during the term, and then you just get a lump sum at the end. That's essentially a zero coupon. So we think there might be an issue with that. The commissioner at this point hasn't raised an objection about it, but there might be an issue with those. But that's what a zero coupon bond is, where you pay maybe $70,000 today, and you're going to get $100,000 in 5 years, and you're not going to get any interest payment in between, just an increase in value. One of the reasons they're prohibited is that those kind of bonds offer a huge opportunity for brokers to mark up the bonds without significantly affecting the yield, and so it's really a great area for you to lose a lot of money in markups, and I think part of the reason that they're prohibited for town mutuals. Bond mutual funds and bond exchange traded funds are excellent alternatives to consider under certain circumstances, but recognize that they are type 2 investments, and so unfortunately if you're having a struggle meeting your type 1 minimum requirements, you can't look at those types of investments. But if they are if you do have room in your type 2 allocation, these may be investments that are worth looking at. Bear in mind though, they would need to be custodied properly, so you can't custody these at a mutual fund company. You can't custody these in a brokerage account. You really have to have a qualified custodian to custody these investments. CMOs, we've seen, gosh, a whole lot of collateralized mortgage obligations sold to insurance companies. These are a pain to administer because not only do they have monthly payments of interest, but they have principal pay down, so you're constantly adjusting the principal value of your investment in addition to the interest payment. And no matter how good the issuer is, can be an A-rated issuer or even a U.S. government issuer, they're type 2 investments because of the nature of the investment. So we actually steer completely clear of these kinds of investments. But if you are using them, make sure you recognize they're type 2 and aren't going to help you with your type 1 requirements. And then finally, be concerned about structured products. Specifically, we've seen some certificates of deposit. They're marketed as CDs, but then they do things like offer stock market return or return tied to some commodity or something like this. Essentially, inside of those investments are going to be derivatives, and I wasn't there myself, but my colleague Greg was at the Mutual Day down in Madison. Maybe you were there as well, and apparently there was some comment by the commissioner. I don't know if it was in a formal presentation or privately or whatever, but expressed some concern about insurance companies being sold these kinds of investments and that have exposure to derivatives inside them. So be careful that you know what you own. You either got to figure out what you own or you got to hire somebody to help you figure out what you own, because you don't want to have those things. So appreciated the opportunity to share this time with you here today. Hopefully the information we've provided has been helpful to you in understanding how bonds work and maybe some understanding aspects of that as they appear in your financial statements or as they appear in your investment reports or whatever. But if you do have any questions about any of this, please feel free to contact us. Here's my email address, our company Financial Fiduciaries, our website. Here's our toll-free telephone number. Feel free to drop us an email, give us a call. And if you know of anybody else that would be interested in this kind of information, please share it with them. Welcome to view this, be accessible, as I said earlier, on our website and hopefully through some of our social media channels. So again, thank you for viewing this with us, and we will hope to see you soon.